trend is incredible, but trading against the trend is mastery. In this video today, I'm going to share with you an example of a trade on Euro US dollar, a counter trending trade, and the reason, the bias for this trade entry is basically a daily inefficiency. Now, if I want to look for a counter trending opportunities, I'm looking at the market mitigating a higher time frame key level. I don't counter trend when the market mitigates a lower time frame key level. The only thing that will make me confident to take a trade against the trend is if it aligns with a higher time frame. And for example, this one right here, this is Euro, and as you can see, we're on the daily time frame. And overall, I've always stated my bullishness on Euro. I still want to see higher prices in the Euro. But in the meantime, I'm looking at sell side liquidity. The price could potentially come down to mitigate. And I'm going to share with you the reasons why I'm anticipating for those key levels to get tapped in and the reason for my counter trending opportunity. So right here, as you can see, first thing first, we go into the larger time frame. And this right here, this is the monthly time frame. And if we go into the monthly time frame, you can see this is our swing high, this is our swing low. We draw a Fibonacci from the swing high to the swing low. Why? Because we want to derive our equilibrium, discount, and premium. Now, if I want to buy, I want to buy in the discount. If I want to sell, I want to sell at premium or extreme premium or extreme discount for a buy. Now, in this case, you can see after all this accumulation for buys at discount zone, price expanded to the upside, rallied above this monthly range high right here, took that liquidity. After running that liquidity at a premium, now we go to weekly time frame. And as you can see, this line right here, this is equilibrium. You can see that label, equilibrium. And equilibrium right here, this right here is equilibrium. If I want to buy below an equilibrium, which is discount. Prices are at premium zone right now. So what do? I can either do one of two things. One of them is stay on the sidelines. The second is look for a counter trending opportunity from the higher time frame to sell it. We'll go to daily time frame. Now, firstly, from the weekly, monthly, we've derived our equilibrium. So if I'm looking for a sell, I'll be targeting equilibrium. Now, it doesn't mean that I'll just put my take profit at the equilibrium zone. It means I'll be targeting for price to come to mitigate that key level. And I'll be looking for potential liquidity resting at before equilibrium the price potentially want to run. Now, if we look at the daily is already showing me this daily inefficiency and also buy side liquidity. Now, what I anticipate to see is for price to rally above the buy side liquidity, mitigating the daily inefficiency. The moment that inefficiency gets tapped in right here, the moment price mitigated it, what I'll be looking for right here is a 30 minutes break of structure. Why 30 minutes? I just keep it simple. Count 3 time frames to the left from the current point of interest time frame. So which is 1, 2, 3. We'll go to 30 minutes time frame, and on the 30 minutes time frame, you can basically see how nicely price created a high here. We created a high, a low, a high, a break of structure. After this break of structure, we use this overall low right here as our entry position. And right there, beautiful entry. You can see how price came very nicely to that key level. Came the first time, mitigated it. Came the second time, mitigated it. Stop loss this high. Where's the take profit gonna be? We look for a low hanging fruit objective. How do we derive a low hanging fruit objective? What we do is we look at the daily. Our point of interest is from the daily. Now we'll look for 1, 2, 3, 30 minutes low is going to be our low hanging fruit area. And where do you see is the 30 minutes swing low right here. So if we're looking at, we have swing low, swing high, swing low, swing high. This right here is my low hanging fruit area. First reason, because it's a 30-minute swing low. Second reason, because of low resistance liquidity. You can see that right there. Take profit position 1 is to 6.6. And look how nicely price came straight down into that position. Smash that, take profit, deliver the 1 is to 6.67%, or 1 is to 6.67 risk to reward ratio. And that is basically how price delivered that zone. So that is my analysis on this one. And if you enjoyed this one today and you want to keep seeing contents like this, click the notification bell, subscribe, like, leave your questions at the comment section. And until next time, I'll see you in the next video. Have an amazing day.